One of the worst financial decisions you can make is to keep buying new cars and concentrating only on your monthly payment rather than looking at the whole picture. It can literally wipe off millions of your retirement nest egg. In the previous chapter, we talked about all of the costs associated with owning a car, and if after all of that you still want to own a car and buy a newer one, here are your purchasing options. And in a broad sense, we have cash, finance, lease, balloon payment in the end, and some variations of those. Hey, before we continue, if you can leave in the comments what was the way you purchased your car last time and if you were happy with that way. And if it's your first time here, Intelligence is a website for people who want to be smart with their money, still living their lives, but finding a ways how to save and invest in the future. So if you want to come along for the ride, please subscribe. First option is cash. It's pretty obvious. You're writing a check and you're getting the car back. The pros are there is no interest cost because there is no debt to incur. Number two is sometimes you can get a better deal, especially if you negotiate it right. Number three is you tend to not overpay for the car when money physically coming out of your account and you don't take any loan against it. And number four, the car belongs to you. So if you want to put extra kilometers or tune the car somehow with parts or export it to other country, you can because it is your car. Cons of paying with cash. Number one is you reduce your liquidity and emergency funds. If all of a sudden you need the money back that you paid for the car, it will be really hard or impossible for you to get it. It's because the car loses value and it also takes time to sell the car. Number two is opportunity cost, as we discussed in the first chapter. If you have the money, you could be investing in it and actually earning interest and not losing money in depreciation and other costs. The third con that not a lot of people talk about is when you own the car, you're also responsible to what happens with it. So for example, if a newer car was in an accident and an insurance company decided to repair it, say it was $10,000, yes, they repaired it, but now it's in your Carfax report, so when you go and try to sell the car, nobody's going to pay you a top dollar because it will say the car had a $10,000 repair, and usually that's around the same number of a discount you'll have to give to sell the car. And insurance companies usually don't include diminished car value in their package, and you'll have to sue the person who was in an accident with you. It gets complicated. So when you completely own the car, there is con to it as well. Second option is to finance, where you take out the loan either from a dealer or your financial institution. So what are the pros of the finance? Obviously, number one is you can get a car right now that most likely you don't have enough money in your checking account for. Number two, it can help you build your credit history. If you take that loan, make payments on time, your credit score will improve, especially towards the end of that loan period. Number three, opportunity to invest. If you can get a loan at a very low APR, on the other side, get a really safe investment, but for high APY, you can make money on the difference. It's a pretty risky move, but it's out there. Number four, the car still belongs to you. You can put any mods you want or put as much miles on the car as you want, but you usually can't export it then to another country because now you have a lien against the car. Cons of financing. Number one is you might get more car than you need because you don't see the whole payment coming out of your account. Number two is on top of everything we discussed in chapter 1, you will also have an interest cost on top of all of other stuff you need to spend money when you own the car. Number three, if for some reason you don't make the payments on that loan, you can lose the car and destroy your credit history all at the same time. You can also end up in what some people call upside down loan, and it's when you owe more for the car than the car is actually worth. And this usually happens when you took too much of a loan and the car depreciates too fast or it was in an accident. And talk about the accident, when you take the finance, the car still belongs to you. So if it wasn't an accident and it has this diminished value, you're still responsible for it. The third option is lease, and in very general terms. So this is how lease works. For example, this car costs $60,000 and you're planning to drive it for 3 years. The dealership tells you in 3 years this car will cost $20,000, which is the residual value. So why don't you pay us $40,000? You probably would lose it anyways on depreciation, plus interest, which they call cost of capital, and you get to drive the car, and after 3 years you can just bring it back, it still belongs to us, or you can pay $20,000 and buy the car right out if you love it so much. So with lease you tend to get lower monthly payment, but because the car doesn't belong to you, you can't put as many miles as you want, do any modifications. Benefits of the lease. There are not that many. Number one, it is convenient. You get somewhat of a lower monthly payment, and at the end of the lease cycle, you just bring the car back to the dealer. You don't own it. You don't have to concern yourself with selling the car. Number two is diminished car value might not be your problem. My understanding is as long as you fix the car in a case of accident, the way the insurance company told you, the dealership is obligated to take it back. So if you drive a lot or you do drive in the areas where the accident is more likely to happen, that can be a major benefit for you. Cons to a lease. Number one, in a lot of cases, this is one of the most expensive ways to own a car. And we'll look in more details in chapter 3 when we do the detailed calculation. Number two, it is way more tempting to get too much of a car. Because, for example, if you think you can afford $500 a month as a payment, you'll be tempted to go all the way up to get the car for $500, not looking into for how long you're doing the payment and how it affects your overall financial position. Number three is the fees. Now, the car doesn't belong to you, so the dealership will put a limit on how many miles you can drive per year, and each mile you drive more, if you happen to do so, you'll pay for that. They also expect you to return the car in somewhat a good shape or form, so you'll have to pay for every scratch and dent on a paint. Now, you can purchase an insurance up front, but that will increase your monthly payment. And talking about monthly payment, that's my fourth con here, and it's because it is very hard to understand and properly evaluate what goes into your monthly payment. Let's take, for example, taxes. Do you pay tax on the whole value of the car, or you subtract the residual value? How does your trade-in play into it? And dealership have what they call MDS programs, where you can increase your down payment and decrease your APR, or increase your APR but decrease down payment. As you can see, it gets pretty hard to really calculate and understand, are you getting a good deal? So there's cash, finance, and lease. Those are three very general ways on how you can purchase a car. There's lots of variations. So for example, let's just look at one variation on finance, what I call balloon payment. Marketers and dealers will probably use a different name. For example, Chrysler used to use customer choice financing. So the balloon payment, that's how it works. Say there's a $60,000 car. You go in and the dealer tells you, give me $40,000 in 3 years, plus the interest. Will break it down per month. That will be your monthly payment. And after 3 years, when say you have a better job, you pay the $20,000 and the car belongs to you. So on the surface, it looks very similar to lease, but it's very different. So what are the pros of balloon payment? Number one is, and it's only one, it's some sort of a lower monthly payment. The negatives are huge because you incur a lot of debt costs because you're paying interest on your payments, and that the balloon payment in the end, it accumulates the interest that you still have to pay. Now the car belongs to you, so at the end of the whole transaction, you still have to pay for the car. You can't just bring it back, so you don't have the benefit of the lease. You're responsible for the diminished car value, and you might be in a situation where you have to pay the balloon payment, but A, you don't have it, and you're upside down on your car loan because the car depreciated so much, you can't even get the $20,000 out of that car. So it's a very expensive, last resort kind of a way to get the car. I don't really recommend it. Another variation, and it's on lease, it's called lease takeovers. And the way it works is there's a bunch of people that want to get out of the lease, Either the payment is too expensive, or they want to get that shiny new car, or perhaps they're moving out of the country. So they try to get out of the lease and other people take it over. So in terms of the benefits, a lot of times you can get a good deal because people can be desperate in terms of getting out of the lease, and they will give up the down payment or trade-in that they brought in, so you get the benefit of a lower monthly payment. Also, if you don't need the car for a long time, for example, if you're visiting or working in the state for like say 6 months, that's all you need the car for, you can get a very short period on lease takeover. And you're not responsible for the diminished car value, so all of the benefits of the lease that we described will be passed on to you. On the con side, you got to be very careful on how you go about the lease takeover, because you are responsible to bring the car in a shape and form that the dealership expects you to. So I highly recommend you do some sort of inspection with the dealer, so you know for sure there is that person before you didn't put any mods or any major repairs that you'll be responsible for. And of course, it's still expensive to lease the car because you're not building any equity in the car. So in chapter 1, we talked about what does it take to own the car, all of the real costs. In this chapter, we talked about general and some variation ways on how to purchase a new or newer car. In chapter 3, we're going to do a very specific calculations. We'll take myself as example, have a used Jeep Wrangler. What if I wanted to buy a brand new Jeep Wrangler? We'll calculate how much it would cost me if I pay cash, if I finance and lease it, and how it will, through opportunity cost, affect my financial position. Thank you for watching and stay tuned.